I will be interested in Bitcoin again around like 75K or so. And I think we probably go down lower.
Well, what's up, everybody? It's LG Doucette here, and welcome to the Milk Road Show, the daily crypto show that tries to stay bullish until someone shows us a chart that ruins our day. Today is November 18th. We recorded this end of day yesterday, November 17th, and this episode comes with a very special disclaimer. The episode today provides a bearish outlook on the market. And although Milk Road and our team, we remain very bullish going into 2026, and if you listen to yesterday's episode with Kyle, you'll know that that's true. It's our absolute duty to bring you different perspectives and opinions on the market. That's the whole point of this show, is to give you a lot of different analysis from a lot of different people that are experts and let you make the final financial decision, not us. So we'll probably have more episodes like this going forward. It's very important to entertain the other side, whether people are saying that the cycle is over, that we're going to zero, or whatever that might be. Today's guest is Michael Nadeau, author of the DeFi Report, one of the sharpest, most data-driven voices in crypto. He describes himself as the Warren Buffett of crypto. And here's why this episode matters. Michael didn't just predict weakness in the market, he acted on it. On September 24th, he was just 10% in cash. October 1st, he was 24% in cash. October 9th, 58% in cash, with the mega liquidations happening the next day. And as of November 12th, just last week, he said he's sitting at 78% cash. This guy clearly knew that something was about to happen in the market. And today we're going to break down why he turned bearish and what charts matter most to him. And most importantly, come on, what it would take for him to flip bullish again. Before we start, support the show. For our YouTube listeners, hit subscribe, hit that like button, drop a comment below. And for our podcast listeners, listen, we need that 5-star rating, man. You gotta tell people that you like my voice more than Jay's, and smash that 5-star rating on the iTunes or Spotify or wherever you listen to our shows. Today's episode is brought to you by Blocktrust IRA. Let AI outsmart the market and grow your crypto while you sleep. Bridge, power your business with instant stablecoin payments, no friction, no banks, just global finance made simple. And Figure Markets, earn solid returns on your cash, because sitting idle is not a strategy. Here he is. Welcome back to the show, Michael Nadeau. What's up, man?
What's up, LG? Thanks for having me.
Dude, I'm stoked to have you, especially because your last couple of appearances were very different than the one we're going to have today. And I think a dose of reality for people and a different perspective is always needed. Last time you came on September 18th, the title of the show, I'm not even kidding, on YouTube is crypto about to explode? We were primed for a huge Q4. Something has changed for you. Tell me about that change in sentiment and strategy in the last 5 or 6 weeks. Yeah. It hasn't been that long.
No, crypto moves fast, and I think this is a pretty good example of that. So I think the last time I was on was September 17th, 18th, somewhere in there.
That's right.
And we were, I think at the time, the market's sort of looking at October period, Q4 period. September was, I think we finished down in the month. September is typically more of a bearish month. And so everybody's sort of looking towards Q4 saying, this is where greener pastures are, and this is where the fireworks are coming. And I think we had a similar view. I think that was probably market consensus at the time, and we had a similar view. Our price target for Bitcoin was 150K. At the time, we were sort of looking at, okay, there's probably enough here for another 30% move. You've got rate cuts coming, and we didn't see a lot of the other sort of darker clouds swirling at the time. Now, fast forward, a few weeks, and we did have a big liquidation event. This was before the one that occurred on October 10th, which was also a very large liquidation event, one of the largest since, back in 2021. And at the time, I was looking at that liquidation event as something that, kind of just like a nice little cleanse of sort of market structure, traders getting out over their skis a little bit. Funding rates had gone up. There was a lot of activity on Hyperliquid at the time. And so we sort of cleansed some of that out. And I thought that was healthy, and we could sort of resume into to Q4 and potentially a good Q4. Ended up pivoting out of that, partly because I sort of had one foot sort of in the more kind of bearish camp, where it was possible that we may have a more muted Q4, which would be similar to what we saw in the past cycle back in 2021, when we had a peak in April of 21. We had sort of a mini bear market over the summer months, and then we had another peak, but it barely got above the first peak in April. And so I sort of had a view that that may be what plays out for this cycle. And so as the darker clouds started to seep in, and I'm kind of looking at capital flows, I'm looking at liquidity, I'm looking at fundamentals and Bitcoin market structure, the probability started to point towards, hey, this melt up risk that I thought could play out, where that's the BTC to 150, 160K. That was a risk to me of sort of staying in the market, that I might miss that. There's also a risk to actually staying in the market. I decided that the probability was pointing towards downside risk, and so we made those changes. We went into a much larger of a cash position, and that's kind of where we stand now. So happy to get into any of the details there.
Oh my God, man. What you mentioned a lot of different stuff. What was there a specific moment or specific catalyst of all the factors you mentioned that you remember that it clicked for you, that was, I think I may need to start changing my position?
Yeah. So I think I spend a lot of time with data and fundamentals and exactly what's going on in the market, but we are also very active market participants. So we are writing and we do lots of research. We share our research broadly, very active on social media. So I've got a pretty good pulse of sort of what the sentiment is like out there. And I think one thing that I was noticing as I'm sort of getting more concerned about fundamentals, about sort of what I think is a transitioning economy from sort of the Biden years with fiscal dominance towards what I think is more private sector dominance, and what the Trump administration is trying to do, and to get the economy moving via bank lending, like that does require a transition. And I'm starting to see changes in liquidity out there. As I'm seeing this narrative actually picking up within the crypto Twitter, that the cycle is going to extend. And so I've got this view, like people are starting to say, wait a minute, there's rate cuts coming, we've got regulation, we've got all these bullish catalysts coming for crypto, and therefore the cycle should extend, while I'm starting to get more nervous that we've actually topped. And so that is what started to prompt me to say, wait a minute, the probabilities are pointing towards the left tail risk, which is the downside risk, and not the right tail, which is the sort of melt up risk. And so I haven't seen a lot of people talk about this view that like the economy is in transition. And this was something that happened at the top of the 21 cycle. So if you go back to this, let's say October, November of 21, you had a similar setup here where inflation was 9% or so, and it was becoming clear that the Fed was going to have to come in and start to aggressively hike rates. And at the same time, while that was happening in the background, you had the super cycle narrative coming out, which to me the cycle extension narrative is just another version of the super cycle narrative. And so you had this structural shift that was starting to happen with liquidity under the surface back in 21. I think the same thing is happening right now, and we can get into details on that. And at the same time, you have the market consensus not adjusting to that fast enough. And so that's what forced me to go risk off.
So can you summarize that for me? You said a lot of strong things, but I'm just trying to understand that despite all these very bullish conditions, right, that it's like this is going to be good. And I think around the time when you changed is also when shortly after Jerome Powell said we may not do the rate cut in December, right? Or that maybe that was a few weeks after. Even as you did this, Bitcoin did top so far on October 6th. So still like a little bit after, but you're telling me that you kind of based a lot of this on a mirror image to last cycle, where you had like a high inflation number, and where the Fed was going to, no matter what, have to start to tackle that regardless of, I guess, like the global liquidity. Is that kind of what you're saying? I'm just trying to summarize it.
Yeah.
At one point, so I can kind of move on, keep going with it.
I think just to summarize it, I would say like the key thing is that you have a transit. There's a transitioning happening in the economy, and in 21 that was inflation. It's not inflation today. Today, what you have is this move from lots of treasuries. The Treasury essentially doing all the spending, pumping liquidity into the markets. And the Trump administration coming in and saying, hey, wait a minute, we're not going to do that anymore. That's bad for the economy. It's crowding out the private sector. What we want to do is get rates down. We want the banks to lend. And we want that to be how liquidity gets out into the market. So that transition to me is not going to be a smooth one. There's going to be some choppiness to it. I think that's why we've seen challenges in the repo, reverse repo, bank reserves, all of that. So I'm just saying it's a transition period in 2026, similar to what we saw in 2022 with the transition period. And despite these bullish catalysts out there with rate cuts coming, with regulation and other stuff out there, to me, the most important thing is, what's happening at the margin of the economy. And then we can get into market structure for Bitcoin specifically that just helps me build conviction when I look at the market structure for Bitcoin specifically.
Bitcoin changed the investment game. Now AI changes the strategy. Crypto's wild ride demands perfect timing, selling before drops, buying as it climbs. While most investors panic sell or hope, a select few leverage a crucial edge: AI. Blocktrust IRA's trading platform spots market patterns with precision no human can match. Since 2020, their Animus AI platform has outperformed Bitcoin by 250%. Visit milkroad.com/Blocktrust IRA today to get up to $2,500 in bonus crypto and transform your investment strategy. Stablecoins are the biggest use case in crypto right now, but let's be real, using them on-chain is still way too complex. That's exactly the problem Bridge is solving. Recently acquired by Stripe, yep, that's Stripe, Bridge helps businesses send, store, accept, and launch stablecoins instantly. Explore the future of global financial infrastructure at milkroad.com/bridge.
Let's open up. You
Hopefully
were nice
clear.
enough.
Yeah.
It's very clear. Thank you.
Yeah.
You were very nice to prepare us a deck that is literally tiled why I turned bearish. Nobody freak out, okay? But definitely walk us through this. I think you've already kind of given us an overview, but I would love to know, for a lot of us who look at a lot of these charts, and we've got a whole macro team as well here. We want to know from you, like, what are the charts in here that really kind of changed your opinion on this before this cascade of price action, right? Because you started to change your opinion, like I said, right at the Pico top, right? We're in the 120s of Bitcoin, and now we're in the low 90s, and you clearly saw some charts here that helped you establish that theory. So please walk us through this.
Yeah. So if we go to to chart 2 here. So this is what I'm saying in terms of like on the margin. I'm not saying that the new Treasury Secretary is going to, we're going to go to a surplus where we've actually balanced the budget and the government's, spending less than they're taking in tax receipts. I'm not trying to say that. What I am saying is that I think it is not market consensus that fiscal year 25 just ended at the end of September and the budget deficit came down. I think market consensus is that the Treasury is still spending at the same clip that they were spending under Biden, and that's going to continue, and that this fiscal dominance story is going to continue, and that the way to sort of escape this is in hard assets. I think that's on pause. I think that's coming back, but I think that story is sort of on pause, and I think I'm sort of out of consensus with this view. And the reason I have this view is just this chart is telling me that the capital flows have shifted here. You have tariffs, which are pulling capital out of the private sector and going into the public sector, into the government. So that's a move. That's liquidity negative. And then you have less spending growth, I should say, coming from the Treasury. So on the margin, we're not going to be spending as much as we were in the Biden years. Plus, you're pulling capital in from tariffs. That's sort of the transition to me that is similar. It's not the same mechanics, but it's similar to back in 21 when you had 9% inflation and you had to transition out of that. You were going to have a hit to liquidity. Same things playing out here. You have a hit to liquidity. And when you see the tensions, starting to come up in the, within bank reserves, there's a lot that, I'm not an expert on monetary plumbing, but we do follow a lot of other experts in this area. And so as we're coming up with this view, we're also seeing tension occurring within the sort of banking sector, where you would expect it to show up if there was a sort of a transition going on with liquidity. And so that confirmed, okay, this is happening. Yes, there's rate cuts coming, but we think the rate cuts are needed to just actually backfill what you took out in liquidity with tariffs and less spending growth. And so, yeah, that I think this hopefully sort of lays out why we're saying it's a little bit of a transition here. I'm not saying like, I think they're going to have to go back to the same playbook at some point and turn on the liquidity spigots again, and that sort of debasement trade does come back. But I think you're in a little bit of a sort of a pause on that right now.
Michael, how does quantitative tightening and easing fit into this picture of the liquidity in the market?
Yeah, so we've been in quantitative tightening for years now. The Fed has come out and said they're going to pause quantitative tightening. They're not making any policy decisions around turning on quantitative easing at this time. But I think what was interesting is there was an interesting interview that came out a few weeks, or maybe it was last week, with the new Fed governor, Stephen Moran. And everyone has this view that he's just like this Trump plant, and he just wants to like get rates way down and juice the markets. He actually had some interesting views in terms of what's going to be happening when they stop QT. He actually doesn't view that as like liquidity positive. And I'm not going to get into all the technical elements of that, but the market consensus is that is liquidity positive. And I think there's a lot of sort of nuance with how some of these policy decisions are actually transmitted into the market. And I think we're a ways away from QE. So I think we're going to have to do QE at some point, but I don't think that that's in the cards like anytime soon. And so what would it take to get QE? I think you have to have, more downside markets to get there. So
excellent. Okay. Thanks for kind of clarifying that. What's this next chart that has a massive chart, the massive candle up to the right just in present times?
Yes, that is the government taking the hard-earned money from the people via tariffs and putting it back into the government. So that's money coming out of the economy. This is factored into the first chart we just showed with the fiscal deficit. This is the main reason that the deficit came down. So it wasn't that we actually spent less; it was that we actually received more in FY25. This is projected to, we're going to learn more about whether or not the tariffs are overturned by the Supreme Court. There's potential changes coming here, but right now we're sort of budgeting like 400 billion or so of tariff revenue for next year. And this is just sort of visualizing, hey, that's money coming out of that's liquidity negative for markets.
Right. Do you anticipate that money to come back to retail via this supposed tariff dividend idea of $2,000 per person?
That is fascinating if that's what actually happens, because if you follow the full daisy chain, you're just taking it from people. Maybe there's I don't think it's fully clear who's paying the tariffs. I think it's probably maybe a combination of a consumer, the importer, and the exporting country. But if you're taking it out of consumers and then you're just giving them a check back, like what are we doing? What are we really doing there? So we'll see. My view on the them potentially sending out stimulus checks is that makes me more bearish in the near term. I would say, like, it's bullish. Like, if they have to do helicopter money and all of this, like, great. Like, that's ultimately good for Bitcoin and it's ultimately good for crypto. But I think it's good after it comes out and after the economy's had a chance to process it. But I don't think that sort of putting these things out there is just going to make the market go up. Is kind of my view. And you need and that also has to get approved by Congress. And so, to me, stimulus checks, we've only ever seen stimulus checks when there's like a lot of trouble, in the economy. People really need that money. So again, it's kind of bullish, but like I would expect more pain before that sort of becomes a more bullish thing.
Maybe that retail is a little wiser this time and won't blow it all on NFTs and other random tokens like last time.
Yeah.
Show me this next one as well. You've got this is Bitcoin point in time total supply held by long-term holders. So we're seeing some changes, and people have been holding Bitcoin for a long time.
Exactly, and this is kind of coming back to market structure. And if you believe that 4-year cycle is a thing of the past, and like that's actually going to change in this cycle, then you have to sort of move. You have to reconcile this in some way, because what this is telling you is that the smart money of Bitcoin, which is the long-term holder cohort, they've been exiting the market at these sort of 100K Bitcoin or so, 100K plus. And so what this is telling me, and it looks similar in terms of the amount of profit taking that's already happened compared to last cycle. If that is happening, but your view is that this is good and that we're just sort of like setting a new capital base, who's going to set the new capital base? Is it new money coming in? That's the only way you're not going down from here, is if there's a new buyer that's going to come in and set the bottom of the market. That historically happened. That long-term holders historically are the cohort that does that. So seeing them sell here tells you that there has to be some new diamond-handed, buyer that's going to come in and save the market at these levels. I don't think that's going to happen. I think what's actually going to happen is the people that have been buying over the last year are, as the price of Bitcoin drops below their cost basis, they're more likely to sell than they are to buy the dip once they start going under their cost basis. And so this is part of the data that was helping me just develop a stronger view of Bitcoin market structure, and try to factor in, like, is it possible that we do actually just, we don't top in Q4 and maybe we top in Q1 next year, we top, like, as I was trying to understand that view, I kept coming back to this and just saying, this is the market structure. Like, the thing to pay attention to is the market structure, not the idea of whether or not you're going to have a Q4 top or a 4-year cycle. That's a narrative. This is actual market structure.
Why are we so obsessed with these narratives, Michael? Why are we so obsessed with looking at month over month in crypto compared to past Novembers, past Q4s, making these outlandish predictions of it will get to this price by this point in time? Why are we so obsessed with these ideas like that in our industry?
Good question. I think part of this, part of the reason we have so many of these different narratives, specifically in crypto, is that crypto is a new asset class and we don't have the same KPIs, metrics, valuation criteria that you tend to have for traditional finance. And so a lot of the analysis that people do to try to understand, where are we at? Like, we use discount cash flow analysis and PE, and we have different metrics that we can use to analyze stocks and other assets to say this thing's overvalued, this thing's undervalued. It's priced here relative to something else. We're still trying to figure that stuff out for crypto, and so a lot of the analysis goes back to just like, hey, it happened. This is what happened last time. It did this last time, and you're almost like, when you're just doing comparisons from this, where you're at today versus where you used to be, you're factoring in sort of like market psychology, I think, in a lot of ways. I think a lot of that, like, I try not to fade that. Like, the idea that the volatility of Bitcoin and the fact that it's always topped in the Q4 of the post-halving year, like, that actually really matters to me, because if investors understand how volatile these assets are and they know that there's a history on certain things, and then I can confirm on the market structure here, then I can say, well, it's probably actually it's way more likely that we top in Q4 than something else. And I should probably actually anchor into that, than just assume that whatever the business cycle is saying is going to carry forward. Because if you think Bitcoin's going to have another 70% correction and you're starting to see some dark clouds, like, that's going to change your behavior, knowing that in the past it does correct 70 to 80%. And so then it becomes a self-fulfilling sort of prophecy in some ways, I think.
I guess you're describing that crypto is still a slightly immature market in that sense, that for lack of historical narrative, or even just, I guess, more robust structure similar to stocks, which have been around for 100 plus years. Some specific stocks have been around that long. But for something that's only 15 years old, we have nothing else but these 4-year cycles and these Q4s post-halving until proven otherwise, basically.
I think that's right. I think that's right.
Yeah.
Yeah.
Okay. All right. What else do you have for us in here? Supply held by short-term holders.
Yeah, so this is kind of I guess the mirror image of the chart we're just looking at to say like, okay, we know long-term holders, the smart money of Bitcoin is happy to take profits. Over 100K, I think they're still exiting the market even now down at these lower levels. So that means that we have to have a new buyer. There needs to be a new catalyst. Michael Saylor needs to come in and buy all of that. The ETFs need to come in and buy all of that. Like who's the buyer? And so we're looking at this and saying, okay, there is some new money, coming into the market. Is that enough to, essentially allow you to set a new base at like an elevated level? Historically, what tends to happen is you have the sell-off. It's the long-term holders, the smart money. They decide when the bottom is in. They buy up the bottom. That sets the floor, and then you start to move off from there. So when I see long-term holders selling now, I'm saying, well, that's going to be tough for us to just sort of go up again from here. I think it's more likely that this new money that just came in over the last couple of months, you can see that orange line moving up. I think what's more likely is that these people are going to start to go underwater and sell, and they're probably not diamond hands because they just came in at the top. They're more likely to probably sell. And then as you start to hit, like we were saying, as you start to hit the cost basis of some of these other holders that came in over the last year, like you're just going to test we're going to test everybody that came into Bitcoin over the last year. If prices stay in this range, in this or going lower, we're going to test everyone's conviction and see if they're diamond-handed holders or not. And then we'll see when long-term holders decide that the bottom's in.
So you think that that's what would define the bottom as well, as these OG long-term holders, when they start buying again, you think that would be a sign for you even to re-enter the market or to flip bullish again? Yes.
Yeah. That's what it would take for me to get bullish again. You mentioned like I sort of view myself as like I'm not. I described as Warren Buffett for crypto. I am certainly not.
You said
Warren
that.
Buffett.
I didn't. You told me that when we were chatting before. To say you were like, "That's me. That's who I am." I didn't make that up.
That's who I am. Yeah, that's who I am secretly. But I mean, the style of when I describe this is sort of like the reason I say Warren Buffett is like we try to be really patient and disciplined about when we sell, when we buy. And so we do have some metrics that we can go through. A lot of people have been asking like, okay, you're bearish right now. And I think people can understand why that's the case. What would it take to become bullish again? And we can go through a few of those charts if you want. And this is like where the patience comes in, because I think the market will test people on our way to sort of finding what we would call like fair value for Bitcoin. So
absolutely. Yeah, I would definitely like to do that. And I'd like to know, since Warren Buffett finally did buy something the other day, we could save that for us. He bought some Google. So maybe you could tell us what the one thing is that maybe you're interested in. But before we get to your flip bullish scenario, I do want you to take us through this chart about how Bitcoin has topped months before global liquidity in the last two cycles. Can you expand a little bit for us?
Yeah. So, I think this is another thing where something we like to do is like, understand what is the market consensus? What is the narrative? What's the market consensus? And then can we do some extra work to figure out if that's actually true or not? And so I think what has become market consensus is that Bitcoin follows global liquidity, or it's correlated to global liquidity. We know that, but that it actually follows global liquidity on a 4 to 6 week lag. There's different analysts out there that'll tell you that it tends to follow, and it follows over these time periods. That might be true, but in the last couple of cycles, Bitcoin topped, and you can see that the global liquidity line was still moving up. So Bitcoin topped a few months before liquidity topped. So if that's the case, then we should actually be asking the question: Does global liquidity follow Bitcoin? Right? Is Bitcoin actually sniffing out what's happening with the macro economy and looking at, okay, the Treasury has to refinance a bunch of debt or whatever coming. we know that that's going to add to liquidity. So, buy Bitcoin price goes up, and then liquidity comes up. I think that's more what's happening. I think markets fundamentally are speculative and markets are forward looking. And so the market should be sort of pricing in what's going to happen with liquidity. And it would do that, through the lens of Bitcoin. So the fact that Bitcoin is now down 30% or so, and global liquidity is actually, the line is still going up, it's telling me that the market is forward looking and liquidity is rolling over right now. And we're probably going to see that show up, in the next, in the next few months or so.
Right. So it's almost like Bitcoin is front running global liquidity, or people are buying Bitcoin as a reaction to liquidity that will be coming into the market, right? That's basically what you're telling. That's the first thing people buy when the liquidity is coming.
Yes, I think so. And, we'll see. I think when we look at what happens at the bottom, so when Bitcoin is bottoming and is it leading global liquidity at that point, I think you can make a more of an argument that it follows liquidity potentially at the bottoms, because market participants are looking more at, what are policymakers going to do to give them the sort of the runway or the freedom to go ahead and buy assets, because, okay, we know the Fed's going to start easing, and maybe there's actually a little bit of a lag at the bottom. But the last two cycles, it does look like BTC was predicting the top for liquidity.
Oh boy, that's I don't want to hear that, man, but it's okay. I appreciate you telling me. Yeah. I wish you told me 6 weeks ago. Wish you emailed me and told me specifically then. Nobody would have believed it. That's other than yourself, obviously. Okay, Michael, we've been talking about 30 minutes, why you've been right this whole time. Please tell us at this point, we need to finish the episode with some kind of hope. What would it take for you to turn bullish after looking at all these bearish charts?
Yeah. So for one, I haven't seen like full confirmation that we're heading into like a bear market just yet. Like, we did have a close that was below the 50-week moving average. That was on that was this week. That was last night. So, typically once you get two weekly closes below the 50-week moving average, that has not been a good sign for like heading into a more prolonged year-long bear market. That's sort of my base case. I know people don't want to hear these things, but that's kind of my sort of base case of where we're going. And so what would it take for me to get bullish again? It would essentially be, where I'm on the other side of consensus. So if I'm on an island now, maybe not so much, maybe the island's becoming a little more populated as Bitcoin price comes down. I want to be on the other side of the island again. And so when everybody has fully sort of come to this view that we're in a bear market, that's when I will start to get bullish.
Hold on. Wait. I hate to interrupt you. I hate interrupting our guests, but You have to explain to me how being at 14 on the fear and greed index puts you on an island by yourself of bearishness. At this point, we're at 10 yesterday. So, I mean, could you not argue, and I'm sorry to interrupt you because you're on a really good tangent, but could you not argue that your island is currently quite crowded?
I would say it is crowded, but I would say that is not an indicator of what market participants have actually done. So the fact that Bitcoin's still trading at 93, 94K tells me that people are nervous, but what are you doing? Are you actually selling? Are you buying? What are you doing? So yes, I think market consensus is definitely shifting towards the more bearish view for sure. But in terms of like, okay, what would it take for me to go back to being bullish? It's a number of indicators that we look at, and what tends to happen is in bear markets, Bitcoin will trade below its realized price, which is a proxy for the cost basis of the network. That number is currently $56,000. I expect it to actually rise a little bit more so that's the realized price. So that's not the actual Bitcoin price. So I expect as new buyers are coming in, they're buying 95K Bitcoin, potentially from OGs that are selling that, the realized price is going up as that's playing out. And so I think that's going to land somewhere around somewhere between 60, 70K. So that's one number to keep an eye on, because Bitcoin usually trades to that at the bear market, at the bottom of the bear market.
Can you summarize for me what that is? Sorry, the true realized price of Bitcoin.
Yep.
Can you just explain really quick what that is?
Yes. So if you go to, I think it's slide 10. We have a slide in here. Yep.
Yep. I've got you. Here we go. Realized price. Okay. Oh, here, you've got it. Okay.
So the red arrows are just showing that in bear markets, the BTC price typically drops below the realized price. So the black line comes below the orange. And what that's telling you is that the realized price is the proxy for the cost basis of all Bitcoins in circulation. And this is a Glassnode metric. It sounds crazy to be able to sort of come up with that, but this is like the power of on-chain data. What they're doing is essentially marking all of the wallets. And then when someone spends from that wallet, that's essentially, they assume that's a sell. So not every spend is a sell, but it's historically been a pretty good proxy for where's the sort of like cost basis of the network. So right now that's 56,000, and that's mostly like long-term holders. So long-term holders cost basis is more in that range. Now, when you go into the bottom of the bear, you tend to collapse to that. In the last couple, we've actually gone below it. And so right now you're 56. So that means you've got a ways. I think that realized price is going to continue to trend up, but I'm looking for an intersection of the price. This is one metric where we look at a number and we look for confluence of all of them. I know this doesn't feel good for people hearing this, but this is the fair value of Bitcoin to me. This is the cost basis of the network. What you see in bull markets is you get a valuation plus a leverage premium that drives the price much higher than the cost basis.
Got it. Okay.
Yep.
So, I mean, hey, listen, I'll tell you, man, it's better than zero.
Yeah.
I'll take 56 to 60K more than zero. It's funny how days like today, it feels like it's at zero. I don't know why, even though it's like you're saying 92K is pretty good. Okay. Okay, that makes sense. Thank you for explaining that.
That's one metric.
Okay.
This one is just showing. So this is showing you the long-term holder cost basis, and so again, we can see that even from the long-term holder perspective, we did drop below it. So right now, that's at 38K. This gets a little interesting because I don't think we're going that low. I don't think we're going to go down. My base case is that we probably go towards. Like I will be interested in Bitcoin again around like 75K or so. And I think we probably go down lower, but this is giving you an idea of where you could go. You could come all the way down to maybe somewhere between 40 and 45K. And that would be in line with, the price collapsing towards that long-term holder realized price.
75K. You guys heard it here from Michael Nadeau. 75K is the target for him. Twice this long-term holder realized price. Okay. That is a good. You're basically telling us you want us to go lower before you turn bullish.
Yes. So that's kind of what these are showing. That chart that you were just on there. So that's the 200-week moving average. This is the long, like almost 4-year moving average for Bitcoin. It is currently at like similar to the realized price, right around 56K. And same idea, you typically do see BTC price converge to its long-term 200-week moving average. And so again, that gets you, probably somewhere around that between 60, 70K zone there. So so people have been asking, what is it going to take? When Bitcoin gets to these levels, like I'm pretty sure it'll be during an event like FTX or something like that just totally wipes out the last of the hope for the market. And then that's when you want to be totally non-consensus. And that's probably usually when the best times to buy Bitcoin. So,
oh God. So what would that be? That's like in the high 50s.
So it's 56K right now. Again, that's a moving target. So the 200-week moving average is going to continue to rise as long as Bitcoin is up above it. So I think that's going to land, in the next 6 months or so, in a similar spot to where the realized price goes, and let's call it 65, somewhere around 65K or so.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
Were you ever worried, Michael, when this was so far above the 200-week average, even before this most recent kind of change in your opinion in the last like 2 months? Because you've got like this is navigating so far above, like at the end of 2024 even.
Yeah. No, we were like fully allocated to the market from the bottom. So late 22, early 23, we wrote about this. We were buying Solana and things like this. And so when it was
below the 200-week.
Exactly.
Right? Like
so we were buying there.
Yeah.
And you're right. We did hold, but we were selling some Bitcoin in the first. We thought that there was a chance that, and I was on Milk Road talking about this, that I thought the probability was starting to tilt towards we might be peaking. This was like the Trump launch, and just like late January, which to me that was the euphoric peak of the market. A lot of people are saying, "Oh, we didn't get any euphoria this cycle." Like that was the period of euphoria when you have presidents launching meme coins. That's when the most new money came into the markets. That's when probably this show got the most views that it was getting throughout the cycle. I think that was the true euphoric peak. And we were selling. We were taking profit in that range. We ended up pivoting out of the view that like we're going into the year-long bear market, and we bought back and we had a good summer. But now we're kind of more like fully risk off. So
okay, that's a good take. Yeah, there was a lot of euphoria going into that Trump launch. Yeah. Okay.
We're looking for confluence of a few of these important factors that would tell me, okay, we're getting close to that fair value number for Bitcoin, and it's time to be bullish again.
Okay. So going forward, Michael, I mean, I think you've given us kind of a sobering outlook, honestly. And especially somebody like you who it's always dangerous when people have been right and you've been wrong in short time frames as well, that we're going to automatically believe everything you say from this point forward. Do you have a time frame for some of those targets to hit? If anything, if we are going to 75K or 60K, when you would be interested as a buyer, or potentially some of those long-term holders would want to re-enter the market, when do you think that would be?
Yep. Yeah, nobody can predict markets. We don't claim to be able to predict markets. We just try to look at a bunch of different data points to give us a probability of where we're at. And that's how we do this. So as far as like timing, I don't know. I would say that historically, the bear markets tend to be about a year long. And what tends to happen is you tend to get these deleveragings, right? So what happens in bull markets is people get complacent, put too much leverage on. That's what creates the valuation leverage premium when you just totally separate from the kind of fair value of these assets. That has to sort of get cleaned out. When that gets cleaned out, which we have experienced, the second wave of that tends to take you down another layer, because we don't know what's going on out there right now, but there could be an exchange that's like insolvent. There could be a market maker that's insolvent, that's suffering. And when these bad debts have to become realized in the market, usually that spooks the market more. And this is how you end up finding a bottom. So that process, it takes time to play out. So it sort of kicked off in the last cycle with Terra Luna. That was the first leg. And then you kind of went a period of about 6 months where you had some dead bodies out there that basically didn't get serviced until CZ started taking shots. So I think we're in that right now. There's probably some stuff out there that is going to come to the surface. Nobody knows for sure, but I think it's a process, and I don't think it will happen like overnight. I think it'll take a little bit of time. Sort of a vague answer, but
I think that's a great answer. Last question for you, and I promised earlier that we would circle back to this. Warren Buffett, you compared yourself to him. You're the crypto Warren Buffett. He bought his first equity in a long time the other day with Google after sitting on like whatever it is, a couple $100 billion of cash. What is the one thing that you have your eye on in this market?
The thing I have my eye on is Bitcoin. So what we typically do is we want to allocate to Bitcoin with conviction when we think like fair value targets are being hit, and Bitcoin tends to lead the market. And so we tend to be like pretty allocated to Bitcoin, and then we will strategically find times when we want to reduce our Bitcoin position and go into like things like ETH and other like higher beta assets. So for me, when I step back in, it's going to be Bitcoin first, and that's a key thing. We only, I have other investments, so it's not like I only invest in crypto, but we only talk about like our kind of our crypto focused investments. So.
Okay.
So yeah, it's Bitcoin. That's probably a boring answer. Because
I mean, Google's boring too. Google's not the most
maybe,
exciting one.
And I don't know if that was Buffett. I think it was his partners that were buying Buffett. It's kind of interesting that they've been sitting in cash for this long and they're like top blasting Google at the same time. But I think like maybe just to put a little more color on this in terms of like, why I'm focused on Bitcoin and not like other altcoins or something is that when you go into it would be very unlikely for like altcoins to bottom before Bitcoin did. It's kind of my view is that Bitcoin leads the market. When Bitcoin bottoms, I think the altcoin space is going to be much lower than it is. And the challenge with altcoins, even when you sort of go to the bottom, there is a lot of them have really poor token economic structures where there's still unlocks happening and things like that. So we tend to avoid those in bear markets. We want to be allocating to those types of things when you're in a risk-on environment and there's plenty of like flows to support whatever unlocks might be occurring under the hood. So mostly just looking for our fair value targets to be hit for Bitcoin. We're following a lot of the stuff on the macro. Things can change. We changed our mind pretty quickly, after last time we were on the show. So I always say like, we have strong conviction. We always are rooted in data and a strong thesis, but strong views like loosely held. Like I'm open to changing my mind at any time. So.
It's the most important part of being most important part of being a market participant right there. Okay, Michael, there's two scenarios in which you're coming back on the show. Okay. And if neither of them happen soon, you're coming back anyways. One is you change your mind. Okay. As soon as that happens, you give us a call. You're coming right back. When Bitcoin hits 75K, if it hits 75K, you're coming right back here and you're what we want to see you slam that buy button or tell us why you're not.
Sounds great. That sounds great. Really enjoyed it. LG.
Thank you, Michael. Thanks for coming on the show. You guys can check him out. I guess the DeFiReport.io is the website.
Yes.
So you go check it out. Read all of Michael's wonderful reporting on what's happening on the market. And stay tuned. Every day we have a new episode of the Milk Show Daily Crypto Show. So we'll be right back here tomorrow and every other day.
If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why do we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.